And yeah, it's great to have everybody here. I'm excited for this session as we continue our part two of our structure or our SMT, structure, momentum, timing, strategy. Just to kind of understand the concepts and get a better feel for things. Welcome in, Dan. Thanks for opening up there. Andrea, welcome in. Cindy, nice and early in California. Dr. Latrice, welcome in. Eduardo, Miss Iris, Joe, what's going on? Pablo and Tommy. All right, we'll get started right away. Yeah, and then with the class is scheduled around 7:15 ish, but we give ourselves about 10 minutes to get some coffee, get our caffeine in just so we can be able to be focused and we'll get started here right at I tried to start right before 7:25 and the class goes to about 8:30 ish, depends on the length of it. But glad to have everybody here. We did have a great trading week. As far as the direction of the market. Again, though, right? Sometimes we have the direction right, but in between there, we either win, lose, or draw. And that's the whole thing about experience. Because we say that we were right in the direction. We were definitely right in the direction, right? A good example was that GBP USD trade, right? We wanted buys and we got some good buys at the bottom. And the news came out, I think, mid Wednesday. We were indecisive. Cindy asked me, gee, things and they keep going, turn back around. And I saw midpoints and like, we're below the midpoints. I don't think so, right? And then, gold had done a massive drop. And I was like, wait, did the dollar get strong? Next thing it did hold. So that's the thing, right, about trading, right? It's just, the whole thing is like, do we know how to multiply? I was thinking about this, before the session. Do we know how to multiply our money with trading? Like, do we know if price moves this much, if I put this lot size, how much I'm gonna make? And do we have a plan that backs that up just so if we reach that quota, we could be done for the day? And if we want more, right? It's fine, right? But at least you met your quota, and if you take a hit on your profits, you'll be okay with losing a fourth of your profits and stuff like that. So those things definitely do come with time, that experience. But as far as learning how to read charts, entries and exits, all that good stuff, that will that's important. That's important to know. Combining everything together will make us more effective and efficient traders in making trading decisions. But once again, y'all welcome in. And as always, right, the Trade Circle is we're an educational platform, so any information shared is for educational purposes only. Our education, though, is very practical. We want to make sure that you understand these charts, as I mentioned, know how to make money from them, from day one as much as possible. But we do need that time and experience. So, all right, Dan, well, I will go ahead and take over. I appreciate that. And speaking of caffeine, I haven't had mine yet. And get the day started. That's everybody ready to go? Let's go. Let's hit those C's there to get us going. And today's the midpoints. Today's the midpoints of the of our system here. And yeah, I'm excited for this one because believe it or not, guys, this system, you know, I've been personally back testing it for about 2 years. Me and my colleague. His trading name is known as Mr. Timebox. But it's also backed by the Ichimoku Cloud system indicator. Okay, it's also backed by the Ichimoku Cloud system indicator. And what does that mean? Well, this cloud indicator has been around for a very long time, right? Um, and it took the creator, Mr. Goichi Hosada. I mean, when it comes to books of trading, I have two books, a lot of PDFs of the cloud, and it's a great system to know. we're not really using the cloud like I used to before, but I do believe you know, it's important to kind of understand how the cloud is. And that's where the midpoint class today will have. Yes, Joe, and actually let me do that. Let me take a pause here and go back to that right quick. Because I had a couple people message me about the recordings. Yeah, so all our recordings, I think if you go back to our the Circle Pro platform, okay, you go to resources and recordings, and the Sunday. So here, these recordings down here are the consistent ones that we do, right? This is the Monday support calls, the live trading playlist, and then the Sunday study playlist. And then over here has some other recordings for us to kind of just get a feel for them. When you click on the Sunday playlist, all you got it's all here, the Sunday educational playlist, and you see this little drop down button. That should be it right here. Sunday, April 1st, SMT, and you can find the previous recordings all right there. And obviously Marcus's, I separated ours, so whenever he comes in, he can mute it. But that's how you can find the recordings. If there's anytime there is a recording that is missing, please let us know. Sometimes the YouTube takes a little while longer to upload. Sometimes it doesn't go through. What's it called? No, you're fine, Joe. No, you're fine. You're fine. Okay, we're here. We're a big happy circle of learning, and I consider as a family. So no question is too big or small, and I'm more than willing to assist in that aspect. But yeah, we got it right there. Um, yeah, but sometimes the recordings do take a while. It doesn't upload quickly. Sometimes I do forget. Um, in there. The PDF, there is going to be PDFs versions of this, but once I complete all 3 sessions, I'm gonna have it all together. So just again, these will be in PDF versions for that, so we can do that. Alrighty, y'all. So I can't start the midpoints without mentioning the cloud. Okay, so the cloud it's in relation to the concept of the midpoint, and the intentions of its creator, Mr. Goichi Hosada. We need to dive into the original philosophy behind the Ichimoku system that its components interact. And here's how the midpoint concept connects the cloud's intentions. So if you guys didn't know, right, the Ichimoku cloud is a standalone indicator by itself. Let me quickly add it here in our box system. So this one is known as Ichimoku. And then this is the one that has no author. So once you add it in there, right, you're gonna get all these wiggly lines. You get all these wiggly lines there, but it's a very important system to understand, right? So the philosophy behind the cloud, it's a complete system, understanding market behavior at a quick glance. Okay, that's the whole purpose of the cloud, to understand the market behavior at a glance. So whenever you look at the cloud indicator, it's known as the cloud because of this fluffy, fluff that you see here. If it's green or whatever color you choose, we're bullish. Okay, we know we're bullish. So at a glance, okay, this pair is bullish. Let's say, for example, I'll go to another pair. The dollar, okay, it's bearish. Why? Well, because the cloud, right, is red. You go to another pair. This is the Euro USD, right? There's what do we at a glance, we're green. So that's the whole purpose of it, right? It allows you to see everything at a quick glance. The box system is very similar to that. Okay? The box system is very similar to that, and that's the reason why it's important. Okay, so let me go over the components of the cloud, right? And if you click on its settings, okay, right here, it's 5 indicators in one. It's very similar to moving averages, but the calculation is a little bit different. Okay. And the very first line is called the conversion line, or in this scenario right here in Japanese, they do have a Japanese name on there as well. And it's called the Tenkan-sen. But the Tenkan-sen is a midpoint of the last 9 periods. Okay, the Kijun-sen or the baseline is the midpoint of the last 26. And then the span A and span B are actually the cloud. Okay. And this is actually the most important calculation, which we'll focus here in a second. But see, the span B is the midpoint of the last 52 periods projected from the future. Okay. So let's dissect this information right here because it is very, very, very important just to kind of get that information in and how an indicator works allows us to trust it a little bit better, right? Trust it better for us to use. So what the heck does that mean? Tinkinson conversion line, a midpoint over the last periods. Okay, so the Tinkinson right here, right, is the blue line. Okay, the Tinkinson is, or the conversion line is the blue line. Okay, so I will turn off everything else just so it can be easily viewed. Okay, so when a midpoint over the last periods means the last 9 candlesticks. Okay, the last 9 candlesticks. So we count the candlesticks 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, you box them up from the top of the wick to the bottom of the wick in those last 9 periods. Everybody got it? And then you add a midpoint number in there. And you see how this line is lining up perfectly. Well, not the line, excuse me. Let me hide the candlestick so you guys can also see that. You see the midpoint of where the current candle is lined up perfectly right there. Okay, of the last 9 candlesticks. Okay, of the last 9 candlesticks. So that's the reason why that's how it calculates. So instead of having a box, right? Instead of having a box, they just have a line. Alrighty. So what does it mean with the Kijinsen baseline in midpoint of the last 26? So same thing. The only thing is that you count 26 candlesticks. Okay. And I will use my ruler for this. So this ruler right here that I got, you tap it, you put it at the last candle and you count back. You move it to the left. Where's 26 bars? Right there. So from here to the left, that's 26 bars. So now I'm going to make a box from there to there. I'm also make sure I include the lowest wick and the highest wick. Okay, we'll color this one like a light purple or something. And then there goes the midpoint line right here. Alrighty. For the black. Okay, like right? So that's so you guys see the midpoint right there. Okay. And if I turn on the indicator and add the baseline in there, there it is. The baseline perfectly lines up with the midpoint of those last 26 periods. Okay. So these two lines right here are kind of like a mini cloud without the fluff coloring. They really are. Okay. So that's the easiest way to understand this right there. That's the easiest way. So now where does our box system come in? Well, believe it or not, it comes in with the span A. So let me go ahead and add the spans in there. Okay. And the span A is the average midpoint of the Tinkinson and Kijinsen projected 26 periods ahead. So the actual formula for this midpoint, okay, is taking 9, which we know where 9 comes from, plus 26, which we know where 26 comes from, and you divide it by 2. Alrighty. And I believe I'm using my calculator. 9 plus 26, what is that? 35. And then you divide that by 2, which is 17.5. And I end up not using my calculator. All right. I went the long route, and it was easier for me to get it. So yeah, that is where the the 17.5 comes in. Alrighty. Everybody got that so far? Now you don't need to remember this calculation. I'm just adding confirmation to that 17 number that we've been using. Okay. I'm just adding the the value to that 17 and a half. And then I'll let you guys know why it's very, very important. Okay. Good thing. Getting some yeses. Everybody's got their coffee. Let me take a sip of mine. All right. So let's do this. All right. So if this is the midpoint right here, okay, let me go ahead and erase the boxes now since we know how the boxes work. Okay. And we just kind of get a, make a little dot right here. Okay. And this dot should be in the middle in between of those, right? Because that's the average, right? Divided by 2. And if I know how to make a straight line, there it is. All right. So the span A is the midpoint of here, right in between. So that's how our calculation got started. Okay, so now what I'm going to do now is I'm going to hide the conversion in the baseline. Okay. And now what I'm going to do is I'm actually going to count 17 candles back. From the first candlestick to the left, we are right here at this engulfing candlestick. And now I'm going to draw a box there. Okay. 1, 2, yeah, 17. So it's a little off. And can anybody tell me why it's a little bit off? Because technically this is 17, but what is this? This is 17.5, right? That's why it's always going to be a little bit off. But you guys know, you guys are seeing the concept of it, right? How, well, yeah, to be more technical, Cindy, yeah, because the high and the low of the outlining box is 17 only, and this is 17.5. But yeah, that's the reason why it's a little bit off. Sometimes it does balance itself out, but like equally. But yes, it's 17.5 on the span A. All right. Well, you guys also know the second box, right? Our other box is 17 and then 52. All right. So actually, let me turn on those boxes now, right quick. And let me turn off the bigger box. And there we go, guys, right there. Our box system is the cloud. Our box system is the midpoint of the cloud. If I said this before, I've been saying it, but if you're hearing it for the first time, our box system is the cloud itself. The only difference is not shaped as a cloud. The only difference, it gives us a frame that allows us to read structure so we can keep consistency on that aspect. Alrighty. And again, right, if the small box is 17 and if the big box is 52, right here is the midpoint that lines up perfectly with the 52 span B. This one is going to be off sometimes, but again, though, right, check this out. Why is, if the midpoint of the 17 is above the midpoint of the 52, we're going to get a bullish cloud, right? Now, if the midpoint of the 17 was below the midpoint of the 52, we're going to have a bearish cloud. Let me see if I can rewind a little bit so we can see that. And there you go, guys. You see? Because the little box midpoint is below the medium box midpoint, we got a bearish cloud, right? But and I'm this is always this is a fractal this is a fractal class, right? And here we're in the 1 hour chart. Would you say it's time to look for sales? I mean, the cloud is future is red. We're below the midpoints, et cetera, et cetera. So it's we can create a case to look for sales, right? There is a case to look for sales, absolutely. But that's where the other one comes in. Okay? This is why the 204 box comes in, right? What's the structure on the 204? Where's the biggest impulse? The biggest impulse is bullish. So this is currently just a pullback. Should we sell it? I mean, should we buy it? Maybe not, because we're still red here. The midpoints are not really in bullish order. But this is only a pullback because the 204, which we covered last Sunday, the 204 system, we have a bullish impulse. The buyers are still in control, right? Then we just hit play. There it is. Okay. But this is just to kind of show you guys why those midpoints are so perfect. Yes, ma'am. All right here. So Mr. Hosada believed the midpoints represent equilibrium, the fair value between buyers and sellers. Okay. Does that relate to the trailing line? You mean the lagging line, Cindy? I'll touch that in a second, okay? Because the lagging line is very, very important. Okay, the lagging line is very, very important. The lagging line, and actually, yeah, before I move into over here, that is a good topic to consider. All the lagging line is, and it can be used with the box system. Okay, the lagging line is basically reflecting the current candlesticks in a line chart instead of a candlestick chart behind 26 periods. So let me add the lagging line in there. Color here, black color. Okay, so the lagging line is the same price action as the current candlesticks, but in line chart view. So if I would change our candlesticks to a line chart, you see how they're identical? The only difference, right, is that from here to here, that is 26 periods back. Okay. So why is that important? Why is that one? So this kind of just adds confirmation to where, like, okay, when the buy is ready, right? So in order for something to turn completely bearish or bullish, right, the candlesticks and the lagging line have to cross over to the other side of the cloud. So sometimes, for example, we may have a like right here. Sometimes we may have a future cloud forming that is bearish, but until the lagging line completely kind of crosses over down in a bearish scenario, that's the only time it's really, really bearish. It did kind of get like that a little bit right here, right? This was an area where, okay, you know what? We could be going down because, the lagging line is below the cloud and so forth, right? So this will be kind of a scenario where it's ready to go down. But if we were at the box system in there, right, the impulse on the last 204 periods is still bullish. So this is just still a pullback. But that would also help us confirm, right, for example, all right, I'm looking for buys. I'm waiting for buys. Right now is not a good time to buy. Well, because the cloud is bearish, its future is down. The candlesticks are below the cloud, and the lagging line below the cloud. Okay, this is not ready yet. Okay, it's not ready yet. and let's get the lagging line kind of creep back up the cloud, and that's more confirmation. Okay, similar to us, guys, right? Similar to us, we can not to us to the box system. We could potentially use that same scenario where, like, okay, I am gonna wait for the lagging line, right, to get above the cloud or the midpoint or something to confirm this. I haven't really back tested completely all that, but good timing on the question because the lagging line is not here. Okay, but the lagging line does not have a midpoint either. And then the cloud twist comes. Yeah, the cloud twist. Yeah, it's lagging line above the cloud and the cloud twist being bullish. That's stronger confirmation. That's what about the trees. All right, so why the midpoints? So the midpoints represent equilibrium, a fair value. Okay, if you wanna, if this is the only time that I agree with fair value, right? The fair value, um, where it gives that point. And by calculating midpoints over varying look back periods, the system captures both short term and long term equilibrium. Okay. Let me see here. So just a bit extra information that I already covered. And we'll just kind of go over the same thing. The Ichimoku cloud is as a dynamic supported resistance. So the Ichimoku cloud is dynamic because it kind of trends. The box system kind of stays more in frame and doesn't really move too much. We obviously, right, our short term trend, okay, is our 17 and 52, and our bigger frame is obviously the 204 box that kind of keeps everything in check. The cloud is a future equilibrium. But again, though, it's been said in many books that, these, it's been said in many books that um, there has not been a word to word translation on the writings of his books, right? So everything that we know here in the Western side and do not know Japanese or read Japanese, we're getting kind of like, not the full detailed text, right? Because it's still a Japanese pure indicator. All right. So comparing the Ichimoku intentions to the SMT midpoint approach. Okay, the midpoint box indicator has its strong parallels to Mr. Goichi Hosada's intention. It focuses on equilibrium, which is one of my favorite things. Okay, and its dynamic adjustments. Okay, because the boxes are always shifting forward as well. Okay, the creator's intentions in practical trading to balance short-term and long-term views. There's one thing about trading, right? Whenever it comes to the um, time frames, we use time frames to tell us short-term and long-term. But here we're not really using time frame. We're just using three box systems that gives us a short, medium, and long-term view of the market to kind of keep us on frame. All right. It does help us anticipate future market movement. And this, for me, in my opinion, is on another time frame, right? If price likes to go to equilibrium or if price likes to go to a midpoint, all we got to do is go to another time frame and find that midpoint, which will show examples of that. And then last but not least, right, understanding market sentiment. Okay. If price is above a midpoint or above the cloud, it's bullish strength. If price is below the cloud or a midpoint, it's bearish strength. So that's how they correlate. This information, we just read it through because it is important to kind of understand it. So psychological significance of the midpoint. Alrighty. Traders naturally gravitate to midpoints as psychological levels, whether they realize it or not. These levels tend to act as self-fulfilling zones for support and resistance. Buyers feel the price is fair if it's near the midpoint. So it goes back to what Marcus and I teach, right? When it comes to supply and demand, right? If buyers are in control, right, we're waiting for equilibrium. and and that's the reason why these prices, right? You know, they work the way they do. Okay, that's why they work the way they do. Let me go to gold real quick because I'm more familiar with the price section without too much. So like on the what was on yeah on Friday, right? I think we were here on Friday. Okay. Yeah, we were here on Friday. And obviously bullish structure during the New York Open. The bigger the 204 box midpoint is always the strongest, right? It's always the strongest. Sometimes these little ones won't hold, but as long as we're above it, we're still in bullish sentiment. And price came to it. Okay. And again, right, it all comes back to this right here. Price naturally, as that it? Buyers feel the price, or sellers, right, is fair as it comes to the midpoint. So connecting the price levels, this is the current high. Let's call it at 32.45. And the midpoint, let's just call it 32.10, is a fair price to buy from again. Okay. So as price gets near it, buyers are more willing to pay for it again or get in again. And again, here, this midpoint actually went towards price instead of price coming back to it. Oh, there it goes. Came near it, and then we went for one more higher high, I believe. No, that's where price ended. All right, price ended right there. Why the midpoint is a magnet? Price action naturally oscillates between highs and lows, but the midpoint represents a balance between buyers and sellers. When price moves away from the midpoint, it reflects momentum or imbalance. Okay, obviously, because again, it's like a rubber band. Price can only stretch so far out before it kind of comes back and balances itself. All right. Lost my place there. Oh, here it goes. When price returns to the midpoint, it signals a pause in momentum where traders reassess positions, leading to a continuation, rejection, or consolidation. Almost done here. Yep, it's almost done. And we go back to making these examples practical here. Psychological and market structure factors. The midpoint is often treated as an area of fair value. Buyers who enter lower may scale out or recess. Sellers may view it as an opportunity to enter shorts or exit longs. Large institutions and algorithmic traders often use midpoints to measure retracement depth or decide on the next move. Okay. And then last but not least, right, how to apply the midpoint concept in trading as a profit-taking zone, as an entry confirmation zone, and as a decision-making pivot. If price hovers over the midpoint a while, traders should wait for further confirmation rather than blindly entering. All right, so we're going to focus on here now in the last 30 minutes that we have on how to apply the midpoint. So again, right, as profit and as entry, profit and entry, profit and entry. That is to me the key to all this. All right, we have concluded our reading material part of this. Let me see if I can focus on the screen there and show some examples. Okay, show some examples. All right, so I think the best way to give you guys examples on this is for me to do a top-down analysis, and then we'll tie it all back together. Okay, versus we'll look at the structure for of the box system as well. All right, so when every Sunday or every Monday, whenever you mark up your first charts, we we'll start at the daily time. Okay, and let's write these notes down here for us. so we can use them, and I'll share them with you guys as well. Okay, so we're gonna do a top-down analysis. Okay, and we'll start from the daily. Okay, so from the daily, all we really care about is where we're at. Okay, we're still in a bullish trend. You can visually see it inside the whole box system. We're still above all the midpoints. So daily is still bullish, right? Daily is still bullish just on that alone. Okay. So we can mark that here. Daily bullish. If you do want to just kind of mark some points, you can. Okay, there's the lowest point, and then up top is the highest point right now. And in between there, we do have some structure. Okay, all in there. Okay, all in here, we got some structure. So bullish. 4-hour chart. Okay, the 4-hour chart. Oops. It's also bullish. Okay, 4-hour chart's also bullish. Here goes the lowest point. We have the same highest point, and we got structure in between there. So we go 4-hour, and we'll call this bullish. We'll just mark it up as so. Right now, I see this as an entire impulse. Maybe like this. Let me just double check. Yes, okay. Yeah, this was a retracement because from low to high, we did come and at least come to 23%, and then we did expand up. So yes, I do see it as a retracement. And there we are. Okay, so impulse, correction, impulse, correction, impulse. We came back, we went lower than this retracement. So this one is now gone, and then this one is now gone, right? Because of that reason there. And again, I only walk the last 4. 1, 2, 3, 4, A, B, C, D. Okay, or A, B, C, D, just for N wave purposes. Okay, N wave purposes. So right there. All right. Man, this thing is about to fly. So that's the 4-hour. 4 hours bullish. One of the things about the 4-hour though, right, is that we are actually at a higher high, right? So we've got to see how that plays out. Let me go to the 1-hour chart. All right, on the 1-hour chart, okay, those things disappear, but this was the impulse at some point, and then it completely just shattered it, right? So the new low point of the 1-hour chart is there. Okay, and then we're at the current higher price. Thanks, Joe. Right there. Okay. We don't have the the most significant structure in here. You guys see that? But at the same time, this is now an impulse. Okay, this is now an impulse. And after an impulse is complete, we await a correction. Let me rewind here so you guys can see what we had. All right, and then we'll do these examples here from the 1-hour time frame. Okay, so price in this scenario, right, was more what the impulse was bearish, and we capture it from high to low. Okay, and price stopped selling at some point for gold, and we'll kind of focus right here on the midpoints here, right? Price is trying to return to the midpoint. So we have, we have a bearish impulse with some structure. Price is trying to come here to potentially go down. Okay, that's the setup that the chart is giving us. All right, so we'll keep a close eye on that. And there it goes. Price return back to the midpoint. So what's supposed to happen there? It's like we said, right? It's an area of fair value based on the last 17 candles, or in this specific scenario, the last 17 hours, and the sellers should step in, correct? Well, let's see what happens. Some sellers stepped in, but they were not able to bring price down. So now we're above the midpoint of the 17 hours. Okay. And if the buyers hold from here, where is this going to go to? Go to the midpoint of the next box, at least. Let me color this one orange just so we can have a better visual. Okay, love it. So if this doesn't work, it's going to go up there. What just happened there? The midpoint went lower. You see that, guys? Remember, because again, these boxes move or oscillate forward because it can only fit 17 candlesticks in the first box, 52 in the second, and 204 on the other one. Okay. Oh, I think you meant to say dropping off those bearish candles. That's actually a good observation too, Cindy, in that, and just using that terminology. It's dropping, yeah. Yep. Let me rewind one more time because I did like how that moved. No, you're fine, you're fine. That's a good observation as well. This is bearish dead weight, right? That we need to drop before we go bullish. So we are already above the midpoint, but we can't really expand upwards until drop that midpoint at the rally base rally. Yes, I knew what with that example, Dr. Trees, I'll go to Euro USD as well here in a little bit. That was a great trade that we left for Euro USD on it. So midpoint, we're above the midpoint. So the 17 buyers are starting to get some strength, right? Remember, the further apart we are from the midpoint, it gives us two things. We are it's strength or imbalance, right? Strength or imbalance. So and here we needed to wait about 3 hours to drop off these candlesticks. So 1, 2. Okay. That's the reason why this thing won't take off, because we still got some bearish candlesticks and to our left. But the moment we get rid of these candlesticks, the midpoint also drops, and therefore there's more buyer strength because we're slightly further away from price action, from the midpoint, excuse me. And then if we really want to zoom in, Dr. Latrice was giving us some examples there. We have a BEC right here, engulfing candle to the left, and the brother engulfing candle. So that's also a sign of confirmation that the buyers can step in there. All right, so if we do take this buy, okay, we can either use the midpoint as a stop loss or the ETM pattern as a stop loss, whichever one. Where is our next target? Well, the midpoint of the orange box. Let's see what happens. Oops, it didn't work. We got some big push up. Actually, hold on. Did the midpoint drop of the... Oh, there it goes again. Good. The midpoint from the medium box also dropped. Okay. Because they got rid of this wick right here. Okay. We know this went up because this is gold, right? But it just kind of shows you how sometimes the patience that we need to use to have is really important. Okay, so check this out. We're gonna focus up here, y'all. And every time I share a chart with an arrow like that, right, it's because we're waiting for that to offload. So let me get very close to it. Okay, there we are. So the midpoint is going to drop. Okay, right there. It dropped. So again, it adds some selling pressure to the downside. It kept dropping, dropping, dropping. Now they're closer together. And now we're actually with this huge engulfing candlestick. We're back now above both midpoints. You guys see that? This is actually the trade that that I sent to you guys on Tuesday night. Now that I remember. This is the trade that I sent to you guys on Tuesday night. The huge engulfing candlestick that was there. But again, right, this setup didn't work simply because we were still in bearish position for the most part on that. All right. So now here, let's focus there. There it goes. Now we're at least above two midpoints. They're not in bullish order, but the price action is above two midpoints. And now it goes over there. All right. Now it goes over there. I hit my TP. Oh, the TP would have done almost every $2 move. That's countries. But again, guys, remember it's more about understanding the box system of where is price going to go. Because even at the setup that we had earlier, right? We were in the correct direction. We were just what? A little bit too early. That's all it was. There's nothing wrong with being a little bit too early. I believe in allowing uh I believe in allowing us some flexibility, a lot of wiggle room when it comes to trading. Okay. I believe in a lot of wiggle room that comes to trading. I mean, I believe in a lot of wiggle room because a lot of times we take unnecessary losses when we know we're in the right direction. Okay. I see it, Dr. Patrice. And right now, gold is moving too much. It's hard to, a lot of wiggle room is like almost 100 pips. But again, if you're not over leverage, you're fine. Okay. Let me see. Send me your comment there. Yeah, we do it. We will see. Now, remember the smaller box can actually be a driver of things. I'm not sure if your comment comes in at this current chart. We have these to offload, right? We have these candlesticks to offload. But again, look at the 17. So as the long bearish candles drop, yes, absolutely, because inside of the boxes, we can only fit 17 candles or 52 or 204. So every time there's a new candlestick form, we actually drop one to the left. That's how it works. This entire system works. And that's the reason why this midpoint box, the medium one, got shorter. At some point, it was from up here and down here. And the midpoint was somewhere around there. But we got rid of this huge drop. And now we're kind of more balanced out. All right. So now check this out here. So this is kind of where the 17 behaves like that leading system, which is kind of the whole timing stuff right here. Okay, right there. What is the future? What is the future of the small box. Okay. Incline or bearish. Incline or decline or bullish. Bullish. Once we get rid of 1, 2, 3, 4, 5, once we get to the edge of this huge engulfing candlestick, price is going this low is gonna jump up to there. And therefore it's also gonna move its midpoint up as well. And the midpoint carries price up. So price is always trying to come back to equilibrium. But if the midpoints, if the time says no, the midpoint will go towards equilibrium to the candles and it will push price up. All right. And we'll allow that to happen. Absolutely. Yeah, this is a complete system, guys. I'm telling you, because I mean, it comes from the cloud. Now, here's the thing, guys. Look, the midpoint of the bigger box is not going to change at all until we get to here. So that's the high point of the big box is there, and the low point of the mid box is there. This midpoint, the bigger frame, is not going to move until at least 97 bars for 6 days. Unless, right, the current candlesticks go higher, then it will shift. Okay. So we can also tell the future by understanding. No, I had to deal with what you mentioned. Yes, but yes. Okay, so on that aspect, right? On that aspect, we'll look at that. Okay. And I'm glad you got that, Dr. Latrice. You saw that right there. Okay. So let me do this with the info box. All right. Do you guys like this system though? It just, to me, it's an amazing system. Again, I'm not going to take credit for it 100% of it because it's a lot of years of losing, a lot of years with my colleague working it out and everything. The cloud helps us, right? But it's just like I just feel like we cracked the code or something that just kind of lets us understand price action a little bit better. It'll take time, but I think we all knowledgeable to just kind of understand these things, right? So from the edge of the big box to the high of this wick, this box won't move until 6 days in 6 hours. Alrighty. The edge of the medium box to the next low point, okay, it will actually move in 9 hours or 9 candlesticks, and then it will shift up. All right. However, the little box, in about 5 hours, is going to start trending. Oh, and then Ron, yeah, we're definitely going like this is like kind of like the complex technicalities of it. But as long as you can see structure in there and use a fib and the ETM candles that we do, that right there is still a winning formula. So the bigger box still has 6 days to go to change. The medium box has 9 hours, and we're more in a bullish order. And then the smaller box only has 5 hours left. All right. And then just kind of hit play a little bit. You got this here, and that's the reason why gold kept pumping up. You got the pullback back to the midpoint, and up it went. So at this point in time right here, guys, these two boxes, they were telling us to buy, right? If we focus just on these two boxes, and this may help you out right here, Ron, okay? What structure do we see in these two boxes? bullish structure, correct? Time or the midpoints are about to shift upwards as well, right? Even right here. You guys see that? Go ahead and erase this. So we got bullish structure. The midpoints are about to shift up here and also on the back end. And price just made its final drop to equilibrium or a rally-based rally or whatever it is you want to see as an entry. And then next thing you know, it goes up. And another good target was the high of the box. I like that analogy. Oh, I thought you meant for real. The kids move up. That makes sense, but you meant mids. Yep. It's more about the lows and highs, more about the lows and highs. Okay, because we could have engulfing candlesticks, but still if we had a huge wick right here, if we had another huge wick right here, another huge wick right there, the price ain't move. It's not gonna move. Okay, it's not gonna move until then. So it's just kind of is eyeballing the lows and highs. There you go, Dan. Planet shifts. And then once we pump it up, pump it up, pump it up, there it is. So now we're in the 1 hour chart. All right. And let's go back to our scenario that we had here. We covered a lot of the timing as well, but the timing of the structural momentum timing scenario. The top-down analysis, daily bullish, 4 hour bullish. The midpoint of the 17 is there. The midpoint of the 52 is there. And the midpoint of this one is here. Okay. We're still in bullish territory. Friday, we never came below the midpoint. So where's Friday at? Yeah, we stayed above it. Stayed above it. So the 1 hour is also bullish. Yeah, very nice, very nice. So then we got that there. Now what I like to do is, and then I do like to go to the weekly candlestick. Okay. This here. Put here SMT the view, SMT review. And now we're going to go to the weekly candlestick. Okay, and then we'll just take into consideration the previous weekly candle. We'll take the high, previous weekly high, and previous weekly low. The open is way down here. We'll put here weekly candle, bullish. Okay. And then once we do the weekly candle, we do we'll bullish and fib the candle. So we'll fib the candlestick from low to high. Okay. It'll show on the 4 hour chart. There it is. Right here. All right, so let's tell ourselves a quick story, okay? We got the previous weekly high, we got the previous weekly low. If price wants to continue buying without a retracement when the week opens in a few hours, it's either going to go to 23% and then go to the extension, or it will go to the extensions, right? And then back to 23%. And that's why I always like to just I like to always tell myself, where is price going to go? And if you know, if you can read it with momentum and the box system and everything else, okay, that's all it is. And what's next is, so after once we do this here, right? Once I have the structure, momentum, time, and review on the daily, 4 hour, 1 hour, after I do the weekly candlesticks, let's cause it. Let's actually uh label it like this. And then the final step is ETM candles. And ignore those. Oh, I'll check on that too. I haven't checked the news yet. Now let's look at ETM candlesticks. And I look at ETM candlesticks from the daily to the 1 hour. Okay. On this outlook. During the week, I do I don't go lower than 15 minutes, but from daily to 1 hour time frame. I mean, weekly you can, but they just don't work the same. But even daily doesn't work the same. Um, but let's see what kind of ETM candlesticks we have. And in order for me to do this properly, I do have to have hide the indicators. Excuse me, I do have to hide the box system, and I can turn on my other one, the base edition, and make sure you have your ETM candlesticks turned on. And now let's see. All right, so ETM candles. All right, let's go from the day. Let's actually quickly take a glance at the weekly. Well, the weekly does have this rally base rally down here. I always like to focus on the bodies and the open and closes, but the wicks are important. Okay, but as far as markup is concerned, I always just start with the week. I mean with the open and close. All right, there's that. Let's go to the daily. Nothing really there except this flip zone, which it is important. Flip zones are important. Um, but I only take into account sometimes. Okay, so nothing on the daily. 12 hour in this huge push up. Nothing there. 8 hour. There it is. A rally based rally. Okay. Because again, remember the ETM candlesticks. Think of it also like a midpoint. Okay. That price likes to come back to equilibrium and then go back up. All right. But if the midpoints say I'm not ready, well, they're not ready. So I like this one here. 8 hour. So again, though, I mark this one wick to wick, but I don't like to have big zones. If I just do the body by itself, the zone is too small for me. So I'll just do the top part of it from the wick to the close. Okay. There's like a certain range that I like the ETF. These are pet peeves of mine, guys. These are all just of mine that I like to how I like my charts marked up. That's all it is. All right, let's go to the 4 hour. And we have multiple rally based rallies up there. So buyers are definitely strong. On the downtrend, on the bearish one, Cindy, I'll use the lower part of it. Yes, yes. And then we got this one. This was a little funky. I don't like that one too much, but we'll keep it like that. Let's see what the 3 hour gives us. Okay, so sometimes I combine them, right? So we have a 3 hour and 4 hour zone right here. Alrighty, oops, yeah, there it is. And 2 hour. See how it gets a lot of noisy right there? That's the reason why I just don't like to go too low in time frames. All right. But I do like this one here, rally base rally. On the 1 hour. Perfect. So look at all these equilibrium. These are all bullish equilibrium zones. There's no way this thing is going to sell off because it's just too much support. Now we come in there, dip in there to turn around, dip in there to turn around, but this thing's gonna fly, yo. Thing's gonna fly. I will and look at this. Look at this, guys. You see this rally base rally? Where is it lining up to? To the 23% of that low to high fib. There you go. You beat me to it, Dr. Patrice. Perfectly. I like if price comes down here, guys, this is what we're gonna buy. That's our buying zone if price can get there. I would love to rush to get the pullback first and then pump up. Boom. And to the at least the first extension. If we can get to the 23% and go to the 18%, it's $120 move. Okay. $120 move. That's a lot of pips. How much money is that? Tommy, you still here, Tommy? Say you wanted to make 1 million, right? How much did I say? One, yeah, one on one standard lot size, y'all. That is $12,000. We can be done for the month. Yeah, I like the setup here. I would love it may price may kind of flirt around right here, then come down and then go up. But this 236 price level, that'll be my favorite. Okay, my favorite. And there it is, guys. That is a complete top-down analysis using the midpoints. That is price level. The entry potentially is 3175. The high would be 30, just shy of 3,300. Yep, just shy of 3,300. And then from there, we let the box system tell us, guide us from here. And look at that, guys. This equilibrium point is going to shift in a little while, which will also shift up to this rally-based rally. And back to your point, Dr. Latrice, right? How those midpoints can also line up with those ETM candlesticks for further confirmation. So, but I will leave this chart here, guys. Hopefully we had a good summary on how these midpoints work. Let me share this chart also with you all as well. Turn the camera back on here since we're wrapping up. Yeah, hopefully you guys enjoyed this session. And next week we'll wrap up this quick segment on it. The recordings will be there. The long recordings will be there with the PDFs once I'm done with all three sessions. But there will be a concise version, so you can kind of just, get the information we need to provide an effective presentation. But let me share this chart first. And I do appreciate everybody's support here, guys. So, yeah, we'll wrap it up. Monday, we'll have our support call for any updates again. And we are going to be working on, putting some effort on those study sessions, study groups that we have. Dan has his Titan Circle covered. Also, Dr. Latrice and I are working on another study group as well, just to kind of, facilitate learning, just providing little channels there so you can get little bits and pieces of education. And obviously, I mainly come in for the Sunday trade circle session, and then the live trading during the week. That's what we have there. But we will wrap it up. We will see you guys on Monday, but we'll stay active on the chats. And we have a great weekend. Thank you guys. Much appreciation. Bye bye. The DJ's asleep. Let's see. All right, yeah. All right, we'll see you guys later.